Good morning, everyone. Welcome to ECB Thursday. Here we are, D-Day, no more bets. We're going to be waiting and seeing what's happening. Morning, Kay.
Good morning, Ryan. Welcome to the most important ECB meeting of July.
Yeah, the most important meeting since the last one.
Exactly, and the next one will be the most important again.
Yeah. Yeah, here we are. Bit of calm before the storm, it feels like this morning. Gavin, Tans at the ready. Yeah, definitely. I've already put up one cheat sheet this morning. You can see there in the live blog if you want to have a read of that. But I'll obviously put up the tanning guide later for Lagarde, because we tend to know what her plans are going to be by how dark or light her tan is for the day. So I'll put that up a bit later. Right, let's get into it. There's a fair few bits and pieces out, some decent news, some minor news. We will start with China, as we often do. Not too much out really overnight. There was a piece out this morning, or some comments out this morning, from the Chinese banking and insurance regulator. These guys have been pretty vocal recently. You may recall when we were looking at dollar yuan. I'll put that up quickly, and let's get it on the bit wider. And we were watching this move up from the sort of the low 6/8s. Oh, I need to go back a bit further. Sorry, back to here. So this move up from the low 6/3s. It was chewing up, and just as we got near the top, these guys came out and said that the move in dollar yuan isn't always going to be a one-way street. That pretty much slammed the brakes in on that particular move, and that's where we found the top. Now these guys have been out again this morning, as I say, not talking about the currency moves, but on this property developer issue that we've been speaking about. They've come out and said, and again, I will just put the comments up there for you so you can see, because we posted this on our live blog, that they will steadily diffuse the risks in the property market and will properly cope with a rise of bad loans, keep real estate financial policy consistent and stable. This is going on the lines of what we said, and we talked about this on the Face interview as well. These issues, as big as they grow, and the market can look at it as risk problems coming into the market, China will 99 times out of 100 step in and back up any problems. They are a backstop for anything. They will support it. They do not want to see any problems appearing that could cause the population, as they are, to ask questions of the leadership. That's what it's really all about. So they will come in and manage the situation, so there is no real knock-on effect to risk. So this again just highlights how the market will get out its pram over things like the Evergrande situation and start drawing lines between what might happen to follow through to the rest of the globe, and then China just comes in and says, "Don't worry, we've got it covered." So that was an interesting piece this morning. That's about the most important thing we've had from China today, really. Moving across to Japan. Obviously, the Bank of Japan meeting, which was unchanged. We've had the usual patter out in response statements from Kuroda. They're going to continue easing. They're looking at the recovery. Inflation may start rising, so on and so forth. Kuroda, however, did come out with a couple of points. One thing that struck me this morning was a couple of things that struck me this morning. This comment he made here, you can see on the live blog, that he wants to learn from Western central banks' cautious stance to tighten policy. I don't know which Western central banks he's referring to there, because at the moment we've had the Bank of Canada pulling a surprise 100 pips out the bag, the SNB putting stuff out, the Fed jumping in hike increments, up to 75 pips, talking about 100 pips, the market getting expectant on that. We've had other central banks, Hungary, you name it, all going large, big hikes, hardly a cautious stance, one could say. So I'm not sure what he's watching here. I think Kay picked out that he also mentioned that it's been the dollar strength that's been the reason why dollar yen's been flying high. I'm not necessarily buying into that, as we know. Obviously, it is the big policy divergence, but he's got just as much a hand in that move by not tightening as the Fed have with tightening. And one other point that was perhaps missing from his comments is that he spoke about how
recovery is well underway.
Let me just turn that off. Apologies. One of the other comments on FX, he was saying he's watching it closely for the impacts on the economy, the same old lines. He didn't mention anything about the speculative side that we heard from Suzuki. I don't think it's a huge omission, but I would have expected him to at least been on the same page and perhaps mentioned it in his comments that they're on the same page as the Ministry of Finance. Obviously, is the MOF, who are important when it comes to intervention and possible levels and how volatile the yen moves are. But it just struck me that he didn't toe the same line as those guys, sticking to the same old rhetoric, if you like. Kay, you got anything you want to add on the Bank of Japan before we move on to other things?
Yeah, just this one line in their quarterly report that they said they must be vigilant to financial currency market moves and their impact on the Japanese economy and prices. But that's something that they've already said somewhere along those lines. So it's more a recap of what's been said over the past months. Also is that they raised their CPI forecast to go above 2% this year, but then dropping back straight away in 2023, 2024. And in line with basically all the rest of the major countries, revising GDP forecasts a bit lower for this year and then flattening over the next couple of years compared to prior estimates. No, I think that the only thing that held the yen back from weakening materially is probably a bit of risk elsewhere. We've seen metals coming off. We've seen it's a sea of red again in the commodity sphere, and we know that big parts of this yen weakness has been driven by external prices as well. So that's perhaps one of the reasons why the yen is still doing okay-ish compared to, well, actually, yeah, if you look at on the cross front, it didn't move an awful lot. And as you rightly pointed out, that might have still to do with those prior Suzuki comments saying that they've seen some speculative moves. So the market might be a bit quiet. Yet I think with what the Bank of Japan did again today, and Kuroda still stuck in his barrel of sake, they may the market is not going to materially strengthen yen from here. It's hard to see how yen can really strengthen unless the dollar has an issue. In that respect, he might be somewhere right. But now I was up for the Bank of Japan. I bought smalls dollar yen again, and just because they're keeping themselves right at the end of the cube. So yeah. There we go. Yeah, and actually what Mike is saying is perhaps true as well. Well, dollar yen or yen pairs, he's asking, do you believe if one could fake dollar yen strength after the ECB meeting? It might be the case that the bigger fish are waiting until after the ECB is done to make a decision on what the yen is concerned, but it might also be that we have to wait until the next week Fed. But in the meantime, I'd say it's tough for the yen to strengthen in such an environment, right? Unless all the rest of the world commodities and things, unless all of that crumbles.
Yeah, and I think Mike's hit the nail on the head, and I said that largely the same in the chat room this morning. We might actually see dollar yen lifted over the ECB if they're pretty hawkish, and that'll be more probably to do with the crosses being dragged up, like euro yen being dragged up on a hawkish ECB. Obviously, it opens up further the policy gap. So that's one thing. But I'm just wondering if then that might spiral into guppy sterling yen pulling up, because there's these higher expectations for a 50 from the Bank of England. So I'm wondering if the ECB might trigger dollar yen moving higher purely by proxy of the crosses going up. But I'll for that one, I'll be looking at these highs. As I said, if dollar yen this morning seems to have moved more on Kuroda's press conference than the actual announcement. But we watched the levels. I've got levels up sort of 138.90 to 139.10ish, and then we've got those prior highs. And if we can't break those highs, that gives you a sign that perhaps we've got a more temporary top or a growing top in there. But yeah, I think that Suzuki's comments may be weighing on a few of those speculative traders who have been pushing the envelope, if you like, and perhaps they're not so keen to push the Bank of Japan and push the MOF and to further highs. But we shall see. We got, as Kay says, we got the Fed next week, which will be the next big risk event, and could be another big decider.
Okay, and also, and we'll talk about that a bit more into the ECB than today. It's also noteworthy that we had the decision made, and then several hours later, Kuroda was talking, and it's actually after he was done talking on his press conference that the yen, the dollar yen, really started to move, right? So, and that's going to be the case for ECB as well. But it's funny that it happened also now over the Bank of Japan, which is becoming an absolute repetition of this fact after every central bank. Now we have the decision, and then the market really starts moving after the pressure. So that was interesting as well this morning.
Yeah, and that's always very prevalent for the ECB as well. And as I mentioned in the in my little previewette there, to watch what happens after the press conference. There's always a risk you get an announcement. The initial lines come out, hike this, do whatever, and the market moves on those. But then the risk is from the press conference. So many times we've seen it. Case picked up with Bailey. The pound will move one way on the announcement, and then Bailey will come out and shoot down the prior sentiment from the announcement, and the quid goes the opposite way. And the same thing is going to be here for the ECB, where you have to get through the press conference before thinking that a price may continue, or has it stopped in its entirety. But we'll get into that when we look at the prices anyway. Another item from Japan was Kishida saying he's going to reshuffle his cabinet early September. I'm not sure if that's going to make any waves, but it's something that's going to keep an eye. I think it was primed previously, wasn't it? When he took over, he was going to have another reshuffle, Kay? Or is this another one that we don't know about?
The other thing that came out overnight, which of course was swamped in the BOJ decision, was the Japanese trade balance. Even though it's looking less gloomy than the last one, they are still in a negative trade balance. So that de facto should weigh a little bit on the yen as well, because there's more imports, which means more commodity buying, more energy buying than the exporters are able to export. So it's a bit of a mechanical drag on the yen as well. Can I just mention something on China, or do you want to come back to that later?
No, we can. Just quickly on the trade data from Japan there. These are big numbers we're seeing here. Without a doubt. And what that does is show, if anything, a big increase in activity. Now, obviously, this is year-on-year stuff, so it's got to be matched off with last year, which was in the thick of the virus lockdowns and things. So there is still a bit of a skew from that. But as Kay says, the trade balance isn't on the right side. We need to see if that irons itself out as things move further. But yeah, go on, Kate.
Yeah, okay. So there was this article in the FT that I saw, and I think that may be somewhere behind this weakening of the yuan again overnight, is that HSBC is installing a Communist Party committee in its Chinese investment bank. Now, they are the first ones to do that. It is written in the rules of China when foreign banks open up in China that over a certain size or something, they have to have this kind of representation in their office. But HSBC is the first one to actually put it in place. So now there's other banks, right, in China, just such as Goldman Sachs, JP Morgan, Stanley, UBS, Deutsche Bank, and Credit Suisse, for instance. So they might be looking to have this kind of move as well. But will the investors like such a move is something that I'm having a few questions about. So I think somewhere in the background that may be also weighing a little bit on the yuan. Besides the fact that if they have to help their economy, if they have to reshuffle those loans and things, those bad loans. They are still not in a hiking process. They are still pouring in and will be pouring in money in their economy. I still think we can move back up to 683 at one stage, but there's a bit of a resistance here, 678.5. But if you want to, I'll share the screen later on after we're done.
Yeah, I was going to look at that as well myself. So we can knock that about because it is up at potentially testing this, strong, probably triple top, you can call it, maybe quadruple top, up in the 678, 79. So yeah, we'll definitely look at that shortly. But yeah, the HSBC thing, you've got to look at it from the point of view that they're probably doing it to feather their own nest in some way, rather than do anything to appease China. So they must, I don't know, it must be a way of bow into the line to get some stuff through that they want to do, business they want to do, I should think. But yeah, I think that's one to keep an eye on. Right, so onto the rest of it. Well, obviously Italy is one for the euro to look at the moment. We've got this mess in Italian politics. Draghi is effectively gone now. He tendered his resignation again today. After he won the confidence vote last night, but without the three main parties in the coalition. That probably means he was the only person to vote, and he voted for himself. But he won it, but the other parties refused to vote in it. So that he's handed in his resignation, which has been accepted. He's been asked to stay as caretaker until the new government is in place. From here, I haven't seen any recent news, but the likely outcome is that Mattarella asks for someone else to step up as PM, or we're going to a general election. There is still a slim possibility, I think, of a technocratic government put in place. It's been done before, but that's where we are with that. Draghi's time looks done. The market really didn't take kindly to that first thing this morning. Yield had not been too bad. We've seen a jump up, but nowhere near the June highs that we got up to, but it's creeping. So that's something we need to keep an eye on. Down here you see the Italian-German spread, something we look at that's obviously creeping higher as well. Could be the first test for whatever the ECB want to throw out with their Fraggle tool. So that's the stuff coming from Italy. Obviously, what happens there, how a government takes shape, what sort of parties it's made up from, is what's going to be in the market's eye moving forward from that. But that's probably something that's going to get pushed to the side while we're in ECB day. In the UK, we had the final two emerge from the leadership contest. That's Sunak and Truss. The votes for that were yesterday. That's now finished until Friday, the 2nd of September, when we have the final vote to decide who's the leader of the Conservative Party and the new Prime Minister of the UK. So that vote is on Friday, the 2nd of September. Obviously, after they've all been on their holidays, I think they go into recess today or tomorrow. So they've got to get their beach time in before they get down to anything important. The announcement is set for Monday, the 5th of September, but I would caution that trying to keep that a secret from Friday over the weekend in a government that's leakier than a sieve will be very hard. So it's likely we will probably hear something either late Friday or whispers over the weekend. So if we get to that point and you're in pound trades, just keep an eye for that weekend risk. I'm still of the view that Sunak is the most market friendly. I'm not saying the pound is going to rally 500 pips when he becomes PM, but from an investor perspective, he is market friendly, he is business friendly, and for the City of London itself, that's an important feature for a Prime Minister. So if he does win it, we could see the pound supported in some fashion that weekend or coming in to the market early Monday. A quick look at some of the other things. We've got the Nord Stream that opened up fine and dandy, albeit with some caveats from Putin. I think we're getting up to that 40% level that we were looking at. It started off at about 30%, so anywhere 30 to 40% is round about where we were when the maintenance happened. It's not a finished story. As we say, Putin has been going on about this turbine part, which was actually for future maintenance. But anyway, the pump is open. The Euro's seen a bit of relief on that. That's quickly dissipated as we go on to the next course, which is the ECB, obviously. Data-wise, yesterday, a couple of numbers out. Some interesting numbers from Canada. We had their CPI data. The headline number missed expectations, but still was 4 points up over last month. The core measures came in a bit hotter. The common 4.6 versus 3.9% prior. The medium was unchanged, and the trimmed core was up a bit as well. So still keeping the inflation picture, the hot inflation picture in Canada, buoyant over there. For me, it's now a question, does that mean that the BOC are going to be just as hawkish with their rates as they were before? And perhaps BOC's Macklem gave a little insight to that overnight, because he came out with some comments last night, that inflation was to remain painfully high. But he also countered that by saying the July CPI is likely to be lower than June's 8.1%. So maybe they front-loaded the last week's hike based on the information they had from this CPI number, and maybe they will turn into maybe not a stronger path moving forward, maybe not another 100 on the way, but we need to see what happens with the rest of the data there in terms of jobs, manufacturing and other sectors there, to see if they're going to start having these recession problems that everyone's predicting for everywhere else. So that was the CPI numbers. The NBA data that I look at weekly, again, we had a couple of bounces there a few weeks ago. That's gone back into turning south. Applications down 6.3%, the purchase index down, refi index down, mortgage rate was up. Now this is a weekly number. It jumped fairly high, 8 pips on that one. That could have been down to these 100 pip expectations that were flying around last week, and so before they all calmed down, that was all happening. That might have been a bit of an input into the rising rate there, and expectations for the housing market to slow further has seen activity drop yet again. That's been a bit borne out in the existing home sales numbers, which were down 5.4%. Yesterday, that was for June. So obviously this NBA stuff is July. So we need to see how the other numbers come out. That's building permits and starts numbers we saw this week were lower on the month. This one's lower again. Now we'll see what happens in new home sales. The only counter to this is that prices were still running pretty strong in the existing sales. So median prices were still up year on year and up over last month. So we're not yet seeing a bite in the pricing. If the housing market in the US is to suffer, if buyers dry up, that's when you start seeing prices fall. So although activity is dropping, prices remaining high tends to tell you that there's still enough activity there. It's not running into a brick wall just yet. Speaking of the Fed, while we're there, there was a Reuters economist poll out overnight. 98 out of 102 economists see the Fed going 75 pips next week. Again, that shows us that these 100 pip expectations are completely washed out the market now. If we didn't know that already, that's confirmation from economists, as much as you may or may not like to believe those guys and girls. The only other piece was from Russia, who wants to have an annexation referendum on some parts of the Ukraine that they've taken over by the 15th of September. I know Kay was talking about this yesterday or the day before, about being the next likely move, sealing up the Russia takeover of parts of Ukraine and how much further they want to go. So Putin wants to push that really quickly by the 15th of September to officially declare these parts that they've taken over as Russian territory, which again shifts the geopolitics and draws the lines further into the Ukraine between NATO and the West and Russia. So, Kay, I don't know if you've got any other headlines and bits and bobs you want to touch upon before we crack into the prices.
No, not really, mate. I mean, I think we can do the ECB now and
yeah. Yeah, one thing I want to highlight today in the options, we've got a fairly large one down near parity in euro dollar. We got 1.84 billion up at 102 even 10, but the big one over 3 billion down at parity there could come into play after the ECB, depending on the news, if we've pushed down there. Just if you want to know, this is information that I put up daily. It is the most comprehensive options outlook you're likely to see in our retail space. I know there's other outlets that produce the options, but they don't go into as great a detail as we do, or in as many pairs. So you can get that on the Forex Analytics platform. And what I tend to do at the beginning of each week is have a look at the week ahead, highlight any of the big expiries, where the main expiries are sitting, where the big strikes are for the week. You can get that, as I say, usually every Sunday night on the Forex Analytics platform, and that's what you can see on your screen there. If you do want to come and join the platform, you can do so. Come onto my site, forexflow.live/platform, give you an idea of some of the things we've got on there. And also, you can take advantage of a 20% discount you can grab there. I know a couple of you guys have joined the room over this last week or so. I did put out a message on the Flow Show Tuesday, I think it was, that I want some of your guys to maybe come on the show as well. You know, as much as I'm sure you enjoy hearing from me, Stel and K-Man, this show is about you traders. So I want to get some of you folks on to talk about your trading, how you get through markets, just as a little bit of a bit of education for other users and other viewers to see that, you know, we pretty much all are in the same boat when it comes to trading, and it's good to get an outside influence from some of you people. And I know some of you have emailed me via the contact form, which again you can see on my site. I've seen those this morning. I will respond to you maybe later this afternoon after we've got over the ECB, but I have seen those emails and I'll be in contact. Okie doke. Right, bang into the prices. Kay, do you want to take them? Take the screens for a bit.
Yeah, sure. And I'll run through what I'm looking at, and then I'll pass it back to you for our ECB special. Or
yeah, definitely. Yeah, go mate.
Oh, hang on a minute. Because I had my the Zoom screen over my charts. Okay.
Oh, and yeah, and I know we had a couple of comments yesterday about maybe some of the charts not being clear enough and zooming in. So we'll try and do that a bit more today. If you do have trouble seeing our charts, just give us a little message and we'll see if we can clear it up. But we are, sharing our screens in full as big as we can get them, if you like, in terms of screen real estate. But we'll have a look at that. Anyway, so Kate, over to you, mate.
All right, no problem. So this is what Ryan was talking about on the Italian spreads. We hovered around the 2% line, which ECB members were talking about, that it shouldn't really be above 200 BPs, above the German rates, which are the benchmark rates really for the European for the Eurozone. And then on the Draghi Commedia dell'arte, we jumped up from yesterday to today to 235, so that's weighing a little bit on the euro. But on the other hand, of course, we're expecting the ECB today, and really the differentials, which I use then as a benchmark for what I will call continued strength or weakness on the euro, and I am using those. Oops, this is the wrong one. This is the that was a sterling one, and I am using those German rates. We are back sort of neutral levels, but ahead of the ECB, there's this interesting bit of a trend line coming in here, and then another one here. When we broke it, we went into quite negative territory for the euro. That's when we did the famous spike below parity on the euro. And ahead of the ECB, I think it's rather interesting that we are hanging somewhere between this 260, 250, 260, 258 and the 250 BP. So if this after ECB would shoot higher and hold those trend lines and hold above the minus 250 BPs, euro could gain a bit of strength. I'm going to keep an eye on this one to see what is what's going to happen this afternoon after the ECB. And then I'll move over onto the yen and what happened after Kuroda. So we had this, I'm going to put it as big as possible. We had this setback, or what we've seen, similar setbacks to what we've already seen on the way up. We had this setback in the dollar yen, held around the 137.40s, which we highlighted before. And now we're moving back. I think intraday there's a bit of resistance here around 138.95, and then bigger one back up at the 139.40 that we have seen before, which is also a longer term kind of resistance in there. So this is with my longs that I've trimmed already a little bit on this way up. I bought it around 138.30 as the Bank of Japan came out. So I've trimmed them already a little bit into the ECB, taking a bit of profit, putting my position, my leftover position under a lot less stress. So we'll see what happens after the ECB. I think if we have to get back below 137.90, and then of course 137.40, 50 to really put dollar yen as such at risk of a deeper move back into the 135s. So for the time being, I'm still relatively positive on the dollar yen. Euro yen, as we mentioned already, is going to be an interesting one today. We've been hovering, testing, breaking below, back into this channel. If the ECB goes 50, which they really should do, there's a chance for these to go back up to 143, in my opinion. If they disappoint us and we start to get back under 140, 50, 60, we might really see a deeper move down here. But the yen being weak, I think the move, if ECB does 50 and get their fragmentation tool out there as well, the bigger move might be on the top side of this one. If ECB gives us what we hope for and what the market is actually hoping for right now. The next one, yeah, I was talking about the dollar CNH. I know Ryan rode this train for a while and then unfortunately got done on a fakie here earlier in the month. I think we have broken above this triangle for now, and as long as we stay above 672, 72 and a half, call it even 671 and a half, it's still going to be constructive. So earlier this week, I've started to put it on again in this around here. I think that day my average is around 670, around this trend line, call it 675ish. I sold a couple out this morning just because of the 678 and a half. We tried it again this morning. Actually, the high is 678.35 so far, and we have to respect this level here. If it goes through, I think we will be in for a retest of the 684.85. It's also a more medium-term fib. 61.8 of the whole move lower that we experienced from 2020 into 2022, and even if we look at the bigger rally that we saw 2018 up to 2020, it's also the 30 it's also the 38.2 at 683. So that zone has a bit of interest. The 683, 685 needs to be respected if ever we get there. That is for the CNH. Looking over at the dollar max is jumping up and down. A bit of risk off this morning with the commodities coming off, with the metals coming off, with the oil coming off, and looks like risk is a tad ish for the time being. So we're turning around this line. I don't really have much to do in this right here and now. If we ever get back up into high 20s, I may give it a try again, depending on what the rest of the dollars are doing. It's also coming on the back of higher US rates that we have seen, that we see this morning for some reason. I don't exactly know why US rates are pushing up this morning. Euromex, which I'm still in my course, small, short, doing not a lot. ECB should give us enough clues to tell me if I need to re-enter into this, or if I just keep my core and wait for moves back into the 2120s to start to add again. If ECB goes all week, I think the euro is really going to get a knock on the head, and this one could come back right into play if we manage to get a break sub 2085 to 80.85 and stay below on a close. And then over to the metals, they are suffering today again, really suffering actually. The whole move in gold here, this is we could still call this a bull flag, although it's a bit complicated. But fact is that 1670, 72 was the springboard to go and have a look at the highs. We came back on it 1, 2, 3, 4 times, 3 times already since, and now this is the fourth retest of this 1670, 1680 zone. It's pretty important. There might be some really painful action if we get below, and look at this actually. This is also in play here. 1, 2, came back on it here, sprung back higher. So we're really in an important zone here on gold. People are talking about 1630, but I don't see that much before 1500s really in the bigger picture if gold would break significantly below 1670. So one to really keep an eye on, and keep an eye on those yields as well as for direction on this. Silver, idem ditto. It's a decent level around here, right? This trend line is being tested again. Prior lows. We had this quick spike lower earlier in July, and we are back below this trend line now. It's trading at 1830. To me, it's not looking very healthy. I'm still core long for the very long term, but and P&L wise, it's not going to put me in danger right here and now. And I'm still looking for a possible late dump to add to it, because I think at the end of the road, when economies will reopen and everything, this thing should go higher again. But in the meantime, we have to be really careful with what's going on in these metals. If we break here, we could have a look into the, why not close somewhere close to $17. And are you going to look in depth to the euro dollar, Ryan?
Yeah, I was going to look at euro dollar. Yeah, we're probably going to be on the same page, but yeah, we'll look at it. Well, you want me to take it back? Or
I'm just going to. Let's have a quick look at the S&P 500, though. I know that people are really watching it closely. So there was this talk about this 39, 35, 40, which we are above now. I do see on my own pictures, I do see some resistance, which should come in around the, call it 39.90, 4K. Really, I do think I see two trend lines here. It is also a retracement level. So keep an eye out on this 39.90, 4K. 4K has always been a bit of a psychological level as well. So keep an eye on that if we ever make it up there, which is a little counterintuitive if we look at yield moves. But hey, there was also this article and something I read in the FT overnight is that the mom and pop money still hasn't given up on equity. So we're still seeing inflows into the equity markets. So for as long as they continue, bigger drops or the famous bear market that people are talking about is a bit hard to materialize. But as we all know, these could dry up all of a sudden from one week to the other if the Fed goes over a certain equilibrium point with their hikes, and all of a sudden it does have an impact. So be a bit careful. If we hang around 4K going into next week FOMC, it's going to be really, really interesting, this one. So, and by that, I hand it back over to you, Ryan, just saying that my own personal opinion about the ECB is that they should really do 50. The opportunity has never been bigger than now. They really should do 50. I think people are waiting to see what they come up with as well on the fragmentation tool, the path of the rate hikes. But if they would really disappoint and only do 25 and not give us too much, if they only do 25, I also think that it will mean that there's a lot of opposition to the fragmentation tool from the core Europe, as we call it, Germany, Netherlands, Austria, the North Europe side of it. Because I think there could be a trade-off today where Lagarde gives in to the hawks and goes for 50 on the condition that the hawks go into ship with her on the fragmentation tool. So that's going to be an additional one to watch. But if they would only do 25, I really think Euro is going to get a severe knock on the head again. And with that, over to you, Ryan.
Thank you very much, sir. Yeah, so let's, we're at this point now, and, we've had days and days of speculation, days and days of chewing it over, what they may do, what they might not do, so on and so forth. As traders, we're at this point now. We can't do anything about the result right now. Okay, so all we can do now is trade what happens. Now, if you want to see this cheat sheet that I put in the chat room, I put up on our live blog. You can follow the live blog. It's not just in the Forex Analytics platform that you can see there. It is on the main website, forexflow.live. These all go out as tweets as well. So if you're following us on Twitter, and if you're not, why not? Please give us a follow, Forexflow Live and Forex Analytics. So you'll get on this. And it really does boil down to four things, as Kay mentioned. What they should do. Most people think they should go 50. What the market expects them to do. And this goes to a point that C. Harewood said in the chat there. The calendars are saying 25 pips, but the commentators say 50 pips is expected. Okay, so the consensus is that they go 25 pips. Okay, that's the overall consensus. That's what the expectations are on the calendar. They're taken from economists, analysts, all the big banks, they're all asked what they think the ECB is going to do, and they all give their opinion, and then a median number is taken from all those responses. That's how we get the consensus on our calendars. What that doesn't take account for often is what the market is actually pricing. Economists and analysts are one thing, traders are another thing, markets are another thing. So the balance has been shifting towards 50 pip hikes. A lot to do with what everyone else has been doing, a lot to do with what the CPI data has been doing. And that has shifted the market tone. So what that does, that creates your price risk. And that's what I always look at going into event. And that price risk can change in the days, in the hours leading up to the event. So where we are now is that the market, some in the market, is leaning towards 50 pip hikes. We've seen that in the pricing, in the money markets pricing a 60% chance of a 50 pip. The OIS market pricing a 50% chance. That makes it a 50-50 bet, but that 50% is higher than the 23s, 39s it was previously. So the pricing has shifted towards a 50 pip. So we've got a disparity between what the consensus is and what a lot of the market are looking at. That creates the price risk. The price risk is for disappointment. If they only go 25 and a lot of the market's leaning towards 50 and have perhaps priced 50, they've got to undo that pricing. And that is going to result in the euro coming off sharply. That doesn't mean the euro won't pop higher on a 50, because there will be a knee-jerk reaction on confirmation. But sitting here as a trader, weighing up the risk, and that's my job as a trader, weigh up the risk, not the profits, not the upside, weighing up my risk. I manage my risk first and foremost in any trade. That's it. All I'm concerned about is my risk. So my risk here, sitting here, is that the price will move further if they disappoint than it will if they confirm expectations. I can't put a number on what that means in terms of disappointment versus confirming the expectations, but I, from experience, know that usually the disappointment weighs higher than what happens that's expected. But at the end of the day, we've all got to put that into trading terms, and that purely comes down to looking at the charts and going over the charts before these big events, picking your level. So we look at these charts every day. We've all got levels on our charts. This is an hourly chart. We've got moving averages, trend lines, you name it, whatever. So what I tend to do is go through the charts and I look at my levels and I pick what I think the strongest levels are. Now, normally I would start on something like a 4 hour. See where the moving averages are. We've got moving averages in the middle here. We're what, 40 pips off of the 100-day on the 4 hour. I'm going to ignore that. So I'm going to have my levels, look at my levels, think of the ones outside of this zone, because anywhere roughly in here, in a first 100 pip range either side, the tech isn't going to count for toffee, because it's going to be a volatile event. So I build up my chart picture looking at the levels. So we've got, the 200 moving average up here. We've got the 55 down here. I build up a little picture in my head of all the tech that's around. The levels I'm looking at the daily moving averages, they're all way above. So I'll be looking at that if we get an upside move. And I build that into my picture. And then what I do is I almost score them, if you like, as to what may come into play and what may not come into play. Now, for this one, I'm trying to keep it as simple as possible. Okay, we're bang in the middle of this range between parity and this 103, 40, 60 area. Okay, that gives me pretty much what, 160 pips upside, 180 pips downside, give or take. So pretty much bang in the middle. Now, for me, over an event like this, usually rate hikes, unless they're a complete shock, don't move the market 500 pips. Okay. It's all about the difference between 25 and 50, which in real terms isn't a big deal. The big deal is the message it sends, not the action itself, if you get my drift. So these are my main levels that I'm going to be watching for. If it's 25 pips and the price can't get through that parity level, that's going to tell me that that's where sellers are drawing the line, or that's where the buyers are saying that's enough. That's where we're going to be coming in. Thank you very much. We've got ourselves a cheap price here, and we're going to buy it off that level. Conversely, on the other side, we get up to this zone and we can't get through on a 50 pip hike. Tells me the opposite. Sellers are coming in saying, right, you've had your money, buyers. This is where we think the level where the euro is fair value, let's call it that. And that's where we're going to come back in with ourselves. Now, if you see a breaks of these levels, you then have to watch, is it a proper break or is it just a fake out like we've seen before? Is it just an extension move on a bit of volatility? And so you look for the breakouts and you look to see how it reacts after. If we break out, price comes back, confirms the breakout point, then you've got a chance that things are moving higher, and then you plan your trade from that. If you haven't been long, if you didn't catch the long and catch the break or whatever, but you've seen a retest, gives you conviction that the break is real, that's when you can try along. But at each point, you can keep your risk manageable to a fairly decent tight range up and above this level. So if you're shorting up here, above here, you're wrong. If you're longing down here, below here, you're wrong. And that's all we can do. We can't control what the ECB are going to do. We can't control what Lagarde's going to say during the press conference. From this point on, for me, it's pointless, sitting here chewing over, 100 different permutations of what might happen. I'm just going to sit there, watch the announcement pop up on the screen, see what the price does, and make my decisions accordingly. So for me, it's parity or the 103.40s and what it does around that. Anything in the middle is probably noise, and I'll probably ignore it. Kay, obviously you're in euro dollar as well. What's your views on the level? Yeah. I mean, I know we were both sort of hinting that a double positive of a 50 and a resolution on the Nord Stream might put it higher, but I think that the Nord Stream's been pretty quickly pushed to the sidelines.
Yeah, and then we have well, let's say that the positives in Nord Stream have been countered by the negatives with Draghi. Let's and then 1-1 and we start the game again. I think it's the combination between the rate hike and the fragmentation tool which is going to do it this time. I would have a few intermediate levels. You have the ones that we've bounced to earlier in the week around 102.70 or so, and then you have a 101.20 in there, which is a bit of a level to me as well. So for those watching the inside big range, because it might also be we don't go to the extremes, right? We might be talking again tomorrow, having looked at a 20 point range post ECB, but I don't think that will be the case. It's going to move. So I would start with 101.20 and 102.70. And then the big outside stuff, parity and 103.5, and then also watch out if it would be a disaster and we go back sub parity, that in the medium to longer term, the 99 is still a very big level. So 99 to me is where really euro holds or folds for the medium term. If this 99 goes, it's going to look disastrous for the euro. Also, one little thing that I would keep as like a trump card, if you want, on the side, is that if they would ever talk about the currency, because we haven't covered that really, but there has been around parity, same as around 119 in former year. A few, like I think it's the French guy, Villeroy, who said not too much about the currency, but mentioned it right as we were trading close to parity. So are we going to have some kind of a reference or more reference than what they have been in the past? Because they have said about the Euro FX level, but they weren't really bothered about it. Are they going to be more bothered about it? It may be the case. That's going to be the little trump card on the side, I think.
Yeah, if I recall from him, he blamed it all on the dollar, a bit like Kuroda. So, in my opinion, that was just completely ignoring the fact that there's a war on his doorstep and all the rest of it, blaming everything on the dollar. Bit of ignorance there, if you ask me. But yeah, it's a fair point. We had this myth that the ECB always comment at 119. Well, here we are, 1900 pips lower, and that's going to need to maybe get a response from them. Now, as I'm talking about this, I haven't brought the Fraggle tool into the conversation. Kay's covered that pretty well. It is going to be a big part of the conversation. Lagarde has been busting her gut to get some concrete details out for this meeting. So it could be the case if she hasn't succeeded in that, and we're still waiting, the market again might take a dim view to that. So even if they do raise 50, but there's no further forward on the frag tool, that could temper some of the gains we may see in the euro. But again, it's a question of permutations. You know, we can do 100 permutations if they hike this and the frag is that, or if they don't hike this and the frag is something else. It can change things around. It's just a question now, watching the words, listening to what she says, and trying to pick up the pieces. What we could happen is, as cases, we don't touch either end of this range. If that's the case, I'm more likely just to sit on my hands and let the dust settle. You know, as I say, I pick my levels. These are the levels I would be looking to trade based on the information. If we don't get to those levels, I'm unlikely to do anything. I'm not afraid to not trade if the levels don't give me what I want to trade. And then we move on to the next thing and we look at the Fed and blah, blah, blah. Now, there's a question there from Catherine. And yeah, Catherine, you know what? I have a saying, the only stupid question is the one not asked. So never fear about whether your question is basic or not. But it's an interesting one. Will the interest rate decision have been finalised days ago, or could they decide to adjust based on Draghi? Two things here. I don't think they will adjust it based on Draghi. You know, Italy, as large a country it is only one of many. And let's face it, if there's not a political circus going on in Italy, something's wrong. This is quite regular. I've been surprised, and it's probably been the Draghi effect that's kept it from spiralling. But as we can tell from this now, there's obviously been stuff simmering under the surface for a long while. So it is a bit of a basket case, Italian politics. On that front, keep your eye on Greece, because they've been very quiet of late. And they put Italy to shame when it comes to political circuses, but I digress. So would they change their decision based on Italy? I don't think so. The meeting itself, a good question. Do they do a 2-day meeting, Kay, like the Fed and the rest, or is it just today's the day and that's it?
Yeah, no. Traditionally,
cool.
they have their dinner the night before, where Lane exposes his 40 pages economic situation update, and Lagarde has been saying that he should shorten it because she wants to listen to other ECB members as well, which are not necessarily part of the governing council who makes the interest rate decisions. So there might be a bit of a push, especially from the eastern side of Europe, where inflation really is spiking violently. So there might be, if she really listened to what people were saying, which are not necessarily governing council members, that may increase somewhere the chances of a 50 BPs today. But no, they have like probably the 1.5 day meeting, right?
Yeah. Cheers, mate. Thanks. For just looking at another pair quickly, Euro Sterling obviously got an interest here because I'm long, average 83.50. As I've mentioned previously, I am getting a bit mindful of the cost of holding the trade, because it is starting to bite. In one sense, I hope they do 50, because that will ease that cost a little bit. But on the flip side, I'm looking at this one maybe to take a bit more profit off the table, just to stick it in the bank and have it there rather than bleeding it out to the broker. So if I see a move up towards 86s and maybe as high as this zone here, I think 87 is probably out of the question. But certainly 86s, I might look to take a big chunk off my trade and look to reload in the dips. I missed this one the other day, and I'm still kicking myself because I was looking at this zone to add some into my longs for a short-term trade. So I missed that, but I'll look to see if we get another move down here. But it all depends on what the message is for the ECB. If they do set a higher path, for interest rates, maybe go 50 and say September and December are going to be 50s as well, and they're going to get rates up fairly quickly, then I'll probably not cut some and see if we get a push up to 87s. But otherwise, if it's a bit flim-flammy and we look to peter out up in the high 86s, I might take a decent chunk off, just so I'm not, as I say, not bleeding money to the broker. I don't know if any of you guys and girls have got any other questions, any other pairs you want to look at. I'll have a quick flick through. Kay, I don't know if you spotted any comments or anything.
No, not really. Just about some legal showdown in regards to the fragmentation tool. It might be it might be that the Germans anyway may challenge it legally when it comes to the case of being unlimited or unlimited in amounts, unlimited in time, the conditionalities and stuff. We might not be there today, and yeah, so this is something that we have to look out for.
Yeah.
Seen some other stuff. Yeah, we covered the US equity markets. Well, at least the S&P. I think we're good.
Yeah, I mean,
today, and let's roll on. Bring on Queen Suntan.
Yeah, definitely. I think for just quickly on US stocks, I think we are also, as well as the earnings haven't been horrendous, which is obviously supportive. We're still seeing the US, the best of the bad bunch, if you like, or holding up from rate hikes in economic activity. So there's no real worries there, and purely from an investment perspective, you're going to run to where economies are doing the best, and if that's the US, it's going to be supportive of stocks. But yeah, that's we'll call that a day for now. Trade safely over the ECB. If you're not sure, you don't have to trade. Sit on your hands, grab your coffee and a bag of popcorn, and see what happens, and then maybe look to pick up the pieces after. There's always a view that you have to trade something. Sometimes there's always a niggle that you have to do something. It's a big event. It might be volatile. There's plenty of pips to be had. You want a piece of it, but stick to your discipline. It doesn't matter. We'll be here tomorrow. Markets will be here tomorrow. Prices will be here tomorrow. Don't get caught out doing something silly. I want to hear no horror stories tomorrow, please. And I'll be asking you guys and girls what you've done over the ECB. Fear not. Anyway, that's it for today. Thank you, as always, to you guys and girls for your support of the show. Stay safe, and we shall see you tomorrow and for the whole review. Thanks, Kay. See you tomorrow.
Cheers, mate. Have a good one, everybody.